Absolutely. Thank you so much. Great. So we have with us today, we have Rags, Martin, and Howard and Fernando's today. And I would love to kick it off with just a short kind of background and introduction on everybody. So Rags, if we want to start with you, are you comfortable starting us off and doing some introductions?
Hi, everybody. First of all, thank you all for being here. This is the session after lunch, although I know you need to get yourself lunch. And of the last day on a beautiful Friday. So well done, everybody, for sticking through. We're going to try and make this interesting. So I'm Rags Gupta. I'm a operator, founder, and also on the investing side. So I might have a perspective on kind of both sides in this session. I was part of the early team at Bright Cove. People might know that. I'm sort of on my 6th or 7th startup. I'm also an operating partner at Hyperplane. Worked very closely with Abigail. And I also, during the pandemic, wrote this book called 1 to 10. And I've got a few extra copies if anybody wants it after. But it's about sort of the growing pains phase after you've built your initial whatever it is and how to sort of navigate that. So yeah, really excited for this session. Thanks for having me.
All right, Fernando.
Thank you. So I'm originally from El Salvador, managing partner of Inogen Capital, which is a VC firm based in El Salvador, investing all of Latin America. Actually started off my career in Boston, working with the MIT department, helping entrepreneurs essentially grow their businesses and connecting them to resources. And I saw that being in Boston, in a very vibrant city with the smartest people in the world, that issue was very lively, and there was a lot of problems with trying to connect the entrepreneurs' needs with the market needs. And now, being from El Salvador, the void was larger. So I went back and decided to make a difference and started from incubators, corporate accelerators, and now a VC fund trying to help early stage entrepreneurs in the region.
Great. Do we have Howard? I can't see him from the live feed. There we go.
I waved. Thanks, Abigail. My name's Howard Kaplan. I'm probably closer to Fernando's stage of the journey and a little bit earlier than Rags's stage of the journey. I do generally 0 to 1 pre-product market fit. I've spent 25 years in early stage high tech startups. I've done 5 or 6 myself, but I've coached a couple hundred founders. I've built products and ecosystems at the Harvard Innovation Labs. To help over 1,000 founders at this point. So anything that falls into the pre-product market fit journey, founder or investor side, that's really the work that I love to do with people.
Great. And do we have Barton on the line? We do not.
We have some more people in the room.
We have Jean. Yes.
Yes, Jean, of course.
All right. Hi, my name is Jean Hammond, and I have a background in all of the categories. I was a serial entrepreneur for a while, and then fell into angel investing. And I can't even tell you how many years, but it's more than 20 that I've been being an active angel investor. And the number of investments I can't even tell you, but it's more than 300 and over 60% women-led firms. So I've had a long experience doing that. And then I thought, just plain old angel investing in early stage, that's not hard enough. So I went out and started a micro fund and accelerator for ed tech and workforce upskilling. And so you think about it, product market fit where the user isn't the buyer. How are you going to do that research? Sales into these convoluted, semi-regulated industries. Oh, good. That's going to be fun too. So, and tons of micro stories along the way. So, a long background. Yep.
Great. And then last but very not least, Sen.
Hi, Abigail. I'm Jennifer Mendoza. I'm co-founder and general partner at Mendoza Ventures. We invest in AI, fintech, and cybersecurity. 90% of our CEOs are underrepresented, and we deploy checks of $1 to $7 million into the A round.
Great. So we obviously have a ton of experience on deck. Rags, I'd love to start with you. When you think about a time when you've received either a tough pass or kind of gone through a tougher fundraise as an operator, what can you give us kind of an anecdote or a story that illustrates this experience, or one that has stuck out to you in particular as an operator?
Yes. There's one that was like particularly seared in my brain. This was a while back, and I distinctly remember I was in London, and I was partnered. It was a company called Video Plaza, and we were a video ad tech platform, system of record for monetizing digital video advertising, working with the largest broadcasting groups, publishing groups, and so on. And I was on the board, hopped on as an operator, and we were doing a growth round. It was actually being led by Strategic, and they were a major group. We're going to be one of our largest customers. We were like getting on board with them and everything else. And it was supposed to close during the holidays, and the round never did. And kind of they sort of started getting a little bit harder to reach. And I remember I was my girlfriend and my wife, we'd gone on a little weekend getaway, as one does in London, to Iceland. I remember getting the call from our founder that at the very, very last minute, they were pulling out. And not just were they not going to write the check for the strategic round, but they were also going to churn, essentially. We were sort of like, we had built a whole plan on having them be a very large customer, and they were going to go a different way. And it was a huge, huge gut punch to us. And just, on a number of fronts, we were anticipating that money and so on. I won't go into much of it, but I'd say like one of the big learnings there were that we didn't have ourselves covered enough in terms of who the decision makers were and the process they had, right? Mm-hmm. We just assumed there was one person that was new to that organization that had come from Google and was, I think, genuinely really wanted to do the deal, right? But what we didn't realize was that this person didn't necessarily have all the juice, all the power, right? And so when it got to the IC, their CFO, frankly, very rightly said, well, wait a second, what are we doing making minority investments in tech companies? We make majority investments in content companies. And we just never anticipated that. We thought this Google guy could get it done. And so that was a huge mistake. And we were able to recover. We were able to sell the business, and everybody made, everybody got a return. But that was particularly, kind of hard lesson to learn.
And what would you say, like, the reverberation was on the team or your peers, or kind of what the overall experience was that left, that left your team?
Look, I mean, it shakes the confidence. We were also starting to hire up, anticipating this growth round, because it was so. I mean, we were literally like talking about the press release, right, with the strategic. So we just thought it was in the can, and so that was like having to backtrack and really keep everybody's morale up. First of all, ourselves, right, and then everybody else's was the hardest part. Yeah,
got it. Yeah, and I think, Gene, it would be great to hear kind of how that experience has resonated with yours, which is in a completely different industry of ed tech. I'm curious to hear if you have either a similar experience or an anecdote with a tough fundraiser pass.
Well, I think that the fundraiser pass has lots of reverberations in different ways, and certainly the story that's happening when you're 3/4 of the way to the altar, so to speak, is the worst, right? And it really behooves everybody to sit down and check out what they're doing well before that, to make sure that this is what we want to do. This is how we want to do it, and so on. I do think that the idea that your investor and you are going to be talking to each other for a long, long, long time doesn't ring through to the entrepreneur, right? They're thinking, got to get the deal done, got to get the deal done. And the idea that person in the board meeting is going to be what? And so I have a similar story. I was on the board of a company that it was during one of these economic downturns, right? And so the partner in the boardroom with us said, no problem. we're going to follow through and be a co-lead on this next round. Not a problem. Went back to his office, called us and said, we're not even playing, much less a lead and much less trying to bring other people in. And so really being aware of all the different attributes of what's going on, who's making the decision. I think who's making the decision is the underlying key in this story. And you know, the number of ways that investors say no, yep, there's a lot of them.
Yeah. So if I were to kind of extract actionable feedback from both of those stories, I think Rags, yours is to really understand what the underlying organizational structure of whatever firm you're talking to is and who those decision makers ultimately need to be and where you are in relation to that. For Jean, is there anything else that you can add to that from your experience that would, you know, you would suggest going into a fundraise or within the middle of a process for founders who are active?
I always say, why haven't you called up somebody else that organization has invested in and find out what they act like as investors? You know, you do market research on every other part of your world. And so as you're starting to get close to something, figure it out. Is this the right partner? Should they be on my board? Is this the right angel investor that's going to bring me open some doors for me, and call somebody who they've worked with before and say, how was it? And I've been on the receiving end of those calls and gone, well, there's this that's really good, and then I'd watch out for that. And again, it's the situations change, and you know, there's almost always a match for somebody with somebody. It's just, am I the right match for that human?
Right. Yep. And that is something that we say at Hyperplane very frequently, is these relationships are sometimes longer than marriages. So really making sure that you are being selective and that you are being thoughtful about those decisions. Definitely. Absolutely. And I think we've seen that pretty tangibly across our portfolio as well. So Senna, I want to turn it over to you and ask kind of from an investor's perspective, how these stories from operators resonate with fundraising for a fund as an investor.
I mean, we also diligence back RLPs. You know, no one thinks that VCs fundraise, but the money has to come from somewhere. And so I lead most of our raise process, and I was the one that secured our anchor check from Bank of America, and it was following a no. So they had deployed to diverse funds and then completely dissolved the team. So to your point, that was unexpected. And so we just went back, and I've been a Bank of America customer since they had their little tent at UMass when I was 19. And I said, I don't want this to be my story to you. And we were part of them restructuring their entire diverse deployment program nationally because we did not freak out. And we went back with an open mind of, we see alignment between our two companies over the long term. We would like to build that relationship with you. It's not going to happen in this way. Is there another vehicle through which we can work together? And then we sort of land and expanded them from there. And I think that is the number one thing, is you will hear no more times in startups than you'll hear yes. It's what do you do with that builds the character of a founder that's a serial entrepreneur.
Yeah. So I think that kind of theme of continuous relationships is really an important one. And a lot of the times, some of our best investments at Hyperplane have been made based on originally having said no to a company and then saying yes later on. And what that journey looks like in between those two steps has been crucial. How the founder is following up, how you as an investor are following up and tracking these companies. Fernando, how do you think about that as somebody who's currently kind of building out a fund thesis and kind of creating those relationships?
Sure thing. And there's an old saying that my grandpa used to say, when building businesses, make sure you do lines and not dots. And that's something that I try to really take full to my heart. Something, especially in our market, where we're not only a new fund, micro fund, we were 15 million AUM, but the region is also very new in VC in Latin America. You really have to set the expectations of how do you want to be looked down the line. And when people talk about the fund and their experience with you as a fund manager, how was that overall experience and again, reflecting that investing will probably last longer than some marriages, we really have to think long term. So something that we always try to do, even if the decision of investing it's a no, give back valuable feedback and try to keep the entrepreneur close to us, because as you mentioned, Abigail, most of the great investments will come from a no. In that case, we have a very specific example where there was this opportunity at a 10 million value cap, which was kind of like our sweet spot, but the entrepreneur's ideas were kind of all over the place. We decided to pass on that investment, but we kept very close with the entrepreneur. We gave them a detailed response as to why we didn't invest, why was the rationale behind it. Data points in an early stage are very liminal. It's more on just like the entrepreneur itself and the market opportunity. But having that close relationship has opened a lot of doors from that specific founder, giving us the introduction of one of the best companies in our portfolio, which is now represents about a 17x over our position. That being said, on the downfall, that opportunity cost us a 20x on his current valuation, which is closing at Series B at $280 million actually this month. But I think those are lessons learned that one has to take close to the heart and understand that it's better to have a very good looking empty fund than a mediocre fund, especially with our limited capital capabilities of deployment. We really have to be very selective in a region where this whole new venture game is fairly new compared to Silicon Valley and the markets where most of the folks probably in the audience are familiar with.
Got it. Yeah. And congratulations on that success. So Howard, as somebody who is the CEO of Foundry, which is a more kind of broadly, like you probably see a lot more of the not support functions, but kind of what the offerings are. You have purview into a lot of different startups and their responses to no's. Can you speak to an experience in which you've either been on the receiving or the giving end of a no, or have seen a startup either deal with a no very well or not, across either the innovation labs or at Foundry or at Sophia?
Of course. I mean, and we've already said it, right? Any founder or investor, frankly, in this room, if you've been in this space for more than 5 seconds, you're going to get told at some point no. And I think that's the universal thing to remember as like the earlier stage, younger founders, younger in their experience, their immediate reaction is to react, is to respond. And I would say in my experience, I always think it's dangerous when you tell people that like, an answer, like a black and white answer. This is like one of the few times I can guarantee you your first initial emotional reaction is probably not going to be the one that you want to stick by. It's not the thing that's going to help. There's a story this summer. The founder of a firm in New York called Harlem Capital, Henri Pierre Jacques, he tweeted out, he basically sent, in his mind, a well thought out pass to a founder. And the founder responded with an email, F off or F you or something like that. And he tweeted it out to 300,000 people have seen it since then. And, the investor community. So one, I don't really love that necessarily. I think like as investors, we have an opportunity to sort of show thicker skin than I think the founder's job is always about not 100, but 1,000, 1,000,000 times harder. I'm not, all due respect to Gene and all your experience, it is really, really hard to be an early stage investor, but I think it's still way harder to be a founder. So I think it's our job to sort of model, so I didn't necessarily love that. But I promise you, to all the founders out there, anybody in the investor community, everybody knows each other and everybody talks. So the thing that I always try to preach, and it sounds so simple and so trivial, but it's so powerful, is to just like learn the pause. like the art of the pause. And so one of the things I do with my founders, I always say, like, if you feel yourself having an emotional reaction, you want to write an email, write the email. Just don't hit send. Just write the email and then walk away. Go for a walk, take a nap, like go have a drink, like whatever, not an alcoholic drink. Don't go back to your computer, and like, let's talk about it tomorrow. When you read it in the light of the day, if it still feels like the right email that you want to send, then trust your gut and send it, because there's probably something in there. It's not usually F off, but just that pause. We more often than not, we do not need to react nearly as quickly as we think we do, because it will almost always blow up in our face.
Yeah, I think the emotional response there, the emotional response component of that is huge. And it's something that I will table for now, but would definitely love to come back to. Sen, when you think about your postmortem process, when you are saying no to a founder and perhaps they come back and they're fundraising and you've been tracking them, when you think about like reevaluating the opportunity, or even if they don't come back, what is your postmortem process as an early stage investor? Like, how do you think about no's in a thoughtful way post sending the pass email?
Yeah, we actually used to give founders feedback and we stopped because we have a really diverse team. And we found that depending on who was delivering the feedback, we got a really different reaction from founders. So I think one of the things that we saw is my co-founder is a Mexican-American man. And when he gives curt feedback or just direct feedback, it's sort of expected because there's a long history of gruff VCs in Boston, which he's following. But I can give the exact same feedback and it's received completely differently. And so it's interesting because I hear from founders a lot, VCs don't give feedback, but we've learned the VC no, which is keep us posted. We're huge cheerleaders because when we have delivered feedback, we do get so many emotional responses. And for us, we're trying to model for our fellows how to be professional. And we're just not in the business of getting young women yelled at. So, so we've pulled back the feedback that we offer a lot. And in our postmortem, I think we have a portfolio company that's a great example of this. I met Greg Wolf, the founder of Fiverity, 6 years ago. And he first pitched us when we were first raising our first fund, and we led his his later seed. And now they're a great portfolio company that we're happy to have. And over that time, we got to know him and the founding team. We watched them surround themselves with the right people. We watched them put feedback into the company that was actionable and helpful, and it became a more investable product in that time.
So it's funny, I actually was on the train down to New York and I was looking across the aisle and Greg from Fiverity was right across the aisle from me. So we had a very nice little reintroduction. So I do want to follow up with that answer and just ask kind of what the touch points between the first time they pitched and the second time they pitched were helpful in tracking them. Was it the investor updates ad? Was it, every 6 months check in and have a 30-minute call? What were those touch points? What did those touch points look like and which were most effective?
For us, we start with a one sheet, and then because our diligence process is 3 to 6 months, we choose whether or not to initiate diligence. And we meet with the founders biweekly and we track them against their own goals. So they tell us what's important to the company at this time. And we have a help or get out of the way approach to diligence. They should not just be reporting to us. We're connecting them with LPs. We're connecting them with industry experts throughout that process. And we track them against their own goals, which I would argue Jean does the same thing, just in a broader way, because we pitched Jean.
Very cool. And Jean, so from your perspective, and I would like to kind of double click on this kind of emotional response that keeps coming up, but from your perspective, operator and founder and investor, what's different about receiving the word no from a fundraising perspective with the roles that you've held, and how does that affect your team, you personally?
Yeah. Well, I'm first going to leap off after the get milestones and find ways to talk about getting to those milestones. So one of the things that we do with the companies we work with is have them set these really measurable milestones and get good at talking about them, because that's what an investor is looking for. They're looking for your ability to move the needle on multiple fronts of your company, whether it's the right hires, whether it's the right product enhancements, whether it's the right market entries, across everything. And so we urge everybody to think that way in terms of communicating, and then that makes it easier to have the conversation. Hey, we didn't think you were making good traction on that market entry, and therefore, so I do think that there's this thing where, as an investor, you want to tell the truth, but you don't want to go too deep, because the world is changing very fast and you never know what's going to happen next week for that company. But at the same time, to the extent that you can give some rational reasons for the categories that are difficult for you as an investor, that's a good thing to say. I mean, I do think that the VC tradition of saying, "Oh, I couldn't convince my partners," or "It's too early," is often a shorthand for something much different. Most frequently, that the total amount of funds that would be able to be put to work and the return expected from that aren't going to match up for that investor. And so it's another good reason to make sure that you know who you're talking to. Is it a giant fund? Do they have to put a boatload of money into every company they talk to? Well, they might take a meeting with you, but the odds of them investing, if you're serving a smallish market, are really, really low. So get to know who you're talking to. And then in terms of communication, I think it's a give a bite that gives people a place to go look into what they're doing and see if there's a way to make it better. And then tell them, I know how hard it was. I was an operator. I raised money. It was awful. Keep going if you can, and come back when you can. Many investors don't mean come back when you can, but I think the crowd here do mean that. But find the right fit. There's lots of paths to money, right? Venture class equity funding may not fit every single company in the world. There might be some kind of royalty-based debt or something completely different that's a better fit. And again, is this company exitable? Will it get to where it needs to go?
Absolutely. So I would like to backtrack a little bit before I go into the other topics, because I do think that this is an important question that I asked and that Jean, you've expanded on. Rags, when you think about like an ideal communication trajectory from a first pass with a vague pass of, check in with us in 6 months, or, you're just too early, would love to reconnect later on. What do those touch points look like ideally for you as an investor? And are they, how does that relationship look from how you have experienced this process as an operator?
Yeah, look, I think there's the comment about lines and dots and not dots, right? And that it's like that really makes a lot of sense and resonates. And it's like an ongoing narrative, right? You have with these investors that may be like you're hanging around the rim, and they may actually end up the narrative changes, something changes along the way, right? It could be the technology, the market, yourself, and so on, right? So it's just like at the end of the day, it's like you're telling a story as a founder, and as an investor, you're listening to the story, right? And you're seeing, hey, do I like this story? Because at the end of the day, we're humans. We're not machines, right? So we make oftentimes really like emotional, decisions, and then we figure out ways to rationalize it, right? Yeah, this time it's different. Like it's AI and like right? And like you're rationalizing it, right? But emotionally, something has changed in you, right? To view that company in a different way. By the way, the flip side happens, right? We were super excited about this company. It checked all these boxes, right? And as the process went along, we were like, like I don't know, we kind of started like, I'm not sure. And like the conviction started changing, right? We literally had term sheet out, and the way the founder handled it, along with like their other investors, it was like they literally turned a yes into a no. They literally like grabbed, defeat from the jaws of victory. And we couldn't believe it. We're like,
We've had that happen.
what are you doing? Take the money, just like get the deal done, right? And actually, like we could have kind of forced the deal to happen, right? But for us, the story changed. Our mental model of this investment change, which is like, can this founder do it again? Can they actually? Because this business is going to need to have capital in the future, right? And if this team is so inept now at fundraising, right? Will that happen again for the Series A and the B and so on? And or we're going to be like left like holding the bag, right? So it was a no.
Yep.
And by the way they handled it kind of also confirmed, like, look, like we had so much respect for them, but it wasn't like, damn it, like you're not looking at, like we're gonna get this done. Like I'm flying out today, and we're gonna like lock ourselves in a room and not leave until we get this done and like herd all the cats. It was like, okay, yeah, thanks, like goodbye. It was so it's like, okay, like that was the right call. We've not regretted that.
Well, it's something I would just amplify based on that. Like what you do and how you do it are two completely different things. And I think I was thinking about that, Tim, when you were talking about like there's no incentive for investors to actually give feedback to founders, really. But in a world where some of our investors have said the best investments come after a no, you actually want to build a relationship with those founders. So you want to tell them why, because if it is going to change in the future, you want to have that relationship. And there's a how to do that it's impossible to do it for every single deal that comes across your door. Some founders are irrational and they say, I sent a cold form in on the website and I never got a detailed reason as to why they wouldn't take a meeting. And it's like, yeah, like we're going to let that one go.
Have you been on an online dating site, buddy?
Exactly. But there really is a difference in the how versus the what, and it can really change things.
Yeah. And I think that's also, it speaks to a lot of founder traits, qualitative, when you think about the response to a no, right? So Fernando, can you, closing the loop here, when you think about an ideal response to a no and what that looks like from a longitudinal perspective, given that there is a chance that they come back and pitch you again, what is that ideal? What do those touch points look like? And what does an ideal experience look like?
So for us, it's actually very high touch. Once we've initiated a due diligence process, and throughout the process, we decide for X, Y, Z reason not to move forward with the investment, we're actually going to have a call, typically a video call now with Zoom, but we'll set 30 minutes aside to walk them through our decision and why we actually came to that decision. I think for us, investing in Latin America, where the ecosystem is still very fresh and the entrepreneurs themselves are also in kind of like a first wave of being entrepreneurs. You don't have a lot of successful 2-3 time entrepreneurs. The time of day to actually go through the points as to why you went through that decision and where are kind of like those pain points that you discovered throughout the process, the value delivered in a call, it's always better. So we're building an ecosystem. We're building something that hasn't been done before, especially in Central America, where we also tend to operate in the Caribbean. And I think having that personal touch is what differentiates us from a lot of the funds that typically send a templatized email with all the excuses we've already went through. So yeah, and again, it's time consuming, but at the end it pays off, right? And I think Rags mentioned it's a human business, and it's a human approach, and it's about the relationship. So taking those 30 minutes of our time can actually make a huge difference for the relationship that we're trying to build. And in our benefit, we actually get a lot of a lot of referrals from those founders that we said no to. They refer their peers, and investor community is small, but founder community is also pretty small, and they talk to each other. So having a good no response, at least in our case, has really paid off.
Yeah, and I think that the emphasis on the investor's role in this whole thing is also very much underplayed. I think there's an importance on how an investor also approaches these situations, because of the fact that we could be in a situation where we have said no before, and then in 6 months it's a deal that we are actively competing for. And so our relationship and how we build that over the course of however long really does matter. Howard, have you seen this play out from startups that you've worked with in the past, or even personal experience, where there's been a extremely stellar interaction from a pass email or receiving the word no from an investor that was a good no, or kind of the other side of that, a terrible no?
Yeah, if I thought more about it, I could probably get to the terrible no. Usually those are the ones I try to, I don't try to steer founders' behavior. I try to just be a mirror for what they're going to do. But we try to intercept those. But on the positive side, I think I'll tell you what the response was, but also why I think it really, really worked, because I think they're both pretty actionable. This is the flip side of it's a thankless job for investors to try to give feedback. I also usually tell my founders, it's pretty worthless. I mean that, with all due respect, it's not something worth going after, because typically feedback from that investor that has passed is more likely going to rob them of their conviction, which is like a dampening effect, than actually amplifying their conviction, which helps them over time. So I try to help them see that, if they're going to pass on you, they don't believe in your worldview. So I'm not sure you want to let them in, more input into your mind. But the response that was so impressive was really, I won't call it cocky. It was not cocky at all, but it was high conviction. It was, with all due respect, I completely understand. It was like active listening. Let me mirror back what I heard you say. I heard you say that you don't think our market is large enough for, the space that we're going after, because you're afraid that we think we're going after Walmart and we can't get it, or what have you. That's what we heard you say. And just make sure that they're showing, understanding of the past. And it was like, with all due respect, we know what we're doing, and we're doing this and this and this, and we know it's going to work. And we're not trying to get you to change your mind. We respect that you gave us feedback, so we're giving you our feedback to that. And it really wasn't emotional at all. It did turn the investment around, which I was shocked by, I have to say. But the real reason why they did it, and I think it was successful, was, and Sen, I was going to ask you this when you talked about Bank of America. They had, we have this philosophy we talk about with fundraising, about be a magnet, not a megaphone. And Gene, you mentioned it too. Founders are sometimes so focused on the money, they're just like, any check will do. They'll talk to anyone. And so I used to get founders that would come and say, I'm pitching Andreessen and Launchpad Venture Group. And it's like, yeah, you're probably not pitching either of them, but there's no round where both of those groups are in at the same time. So let's figure out what you're actually, trying to look for. And being a magnet is know who you're after, size of fund, stage, etc. Know your worldview, have clarity on your mission, because that's what you're after. And for this founding team in particular, this investor was they knew this investor, if they told their story right, was the right fit. There are lots of other fish in the sea, so it wasn't out of desperation, but they just knew. And so they had conviction to say, we know this folks, we know they're mission aligned, so we're going to try again, but we're going to do it very respectfully. And it did work. And I again, you're wrong every day. I was blown away. I thought there was no chance, but I loved what they did.
Right. I think, just to double click on that, all of us have had very thoughtful responses to a no before that lead to a lasting relationship. It is part of the job. And I think one thing that we're all touching on, but not just saying outright, is that fundraising for your startup or your fund will be the most emotionally challenging thing you will do in your professional career ever. Don't crack. Don't yell at everybody. Don't be a jerk because you're having a bad day, and you will maintain relationships with people as you go. you know, like Fiverity, and also like the investors talk to each other. Like Fiverity was named Coalesce for years. Coalesce, if you're a woman and you're pregnant, is a medicine that you take to go to the potty. And I was like, you cannot name your startup this and expect me to invest in you with a straight face. I can't do it. We have to rename the startup. And so he didn't want to rename it. I started texting Coalesce commercials from TV to all of his investors. And now I've invested in Fiverity. Now it's named Fiverity because it was like funny. You know, it's a small community in Boston, but it was also like, come on, guys. I know we're all guys, but let's fix this. And he took it in stride. But also, if you can't handle a couple text jokes, Mendoza Ventures is not your VC fund.
Right.
So Rags, how many times have you, and this is a very totally giving just like a broad range, but how many times have you said no? And how many times did it, or sorry, not that you've said no, you've received no as an operator across all fundraising processes you've been a part of, kind of broadly speaking. And then how many no's did it take to get to that one yes?
Oh, wow. I mean, look, Butler is probably depending on how you look at it, my 6th or 7th startup that I've actually operated in. I've probably been like, you know, helping founders as an advisor or board member to probably another like couple dozen at least or so. I mean, you talk about hundreds, you know, if not thousands, right? Depending, and sometimes it's just a polite no, or they just don't respond. And then a lot of other times it's like, yeah, you're actually, you know, you're sort of dating, and then it just like, you know, and then something happens, right? And you know, that's where obviously the more time you spend, the harder it is, and the more it hurts, right? But yeah, I mean, look, like it's a sales process. At the end of the day, it's just like sales. Like it's literally sales. Like you are selling equity in your business, right? They are buying that for money, right? And there's other stuff around it, but like, you know, with any sales, there's a funnel, and there's going to be the top of the funnel, and then as you winnow it down, and that's just how you got to think. And so, you know, you got to like, and obviously, like the more targeted you are as to you got to be targeted, right? You just got to be targeted on kind of like who you're targeting, even the partner at those firms, and you know, based on a lot of different, you know, factors, right? Knowing like, are they fundraising or not, right? Or do they have money still? Are they still doing deals? Or they just sort of have their shingle up? All that stuff really counts.
Yeah. So to contextualize, so thank you for contextualizing. And Howard, how do you advise startups who are getting hundreds and thousands of no's, as Rags just alluded to? How do you advise them through such an emotional process, as Sen had mentioned?
Well, I think there's a couple things, and one, I love the advice, don't crack. I love it. I think I probably say to them like crack, like crack, but like crack amongst friends, like
crack in private.
Yes, like crack in private, exactly. Because I think it's just such an emotionally taxing journey that you know, the worries just they amplify if you don't like take them out for a spin and get really curious about them. Yeah. And so the thing that I always try to say to them is like, okay, so like let's crack, and then let's figure out what are we going to learn from this. You know, the funny thing is the thing I say to startup founders all the time is like, after seeing literally over 1,000 at this point, what I can tell you is without like 100% certainty, whatever you think is going to happen in your startup is the only thing I can guarantee will not. And beyond that, we have no idea. So it doesn't mean that we don't have things that we can control, but we can't see the future. So oftentimes it's like that. Does everybody know the Taoist parable about the farmer and the horse? I won't tell the whole thing. You can Google it and you can hear it. But the key takeaway is that like on a 10-year journey, sometimes what you think is like the worst thing that could possibly happen to you is actually the calm before the storm. It's actually the clearing of the brush to open up for, you know, the spring that you really need. And that only happens if you actually stop and get curious and try to learn from what you're going through. It doesn't mean take on the investor's feedback as if it's gospel. It means like trust your own intuition. Like, what does your gut say,
Yeah.
and what are you going to learn from it?
And I would actually jump in and say, if you're getting lots and lots of no's, you're fishing in the wrong pond.
Mhm.
You have got to go either figure out how what you have is what that pond wants, or you have to go find a different pond. And the odds are you have to find a different pond. It may not be the right time for you to fundraise. You don't have enough evidence to convince people that you have the traction that will make it safe for them to invest. I mean, think about it. This is a risk business, and so and maybe there's something else going on. So figure out what's going on. Figure out what the 5 things are we need to fix, and say, okay, we're taking a pause. We're going to be back in 3 months, and what we hope to talk to you about is this. And so don't go for the numbers. This is, even though it's a sales process, it's not fundamentally a numbers game. It's a find the person who can hear you talk and that you can hear talk back to you. And so you're really trying to get a conversation going and figure out how to make that happen.
I would also just add that if you're not reflected in the investment committee of that pond, you have a much less likely chance of getting funded.
You're just like, it kind of goes without saying, but it's like, again, I've heard no so many times, right? But it's like, if you're hearing no's, like, it's not their fault, it's yours. It's like your fault why you're hearing a no, right? And it could be because you're fishing the wrong pond, your story's not right, you are coming across in not the right way, or you don't have the right chemistry, but it is your fault. Like, you as a founder have to look in the mirror. If you're hearing that all the time, it's being like, I got it, something's not working, right? And you got to also reckon with that.
It's your opportunity. It's your responsibility to do something about it.
Take ownership of it.
Yeah.
100%. Because it's like, the world is not, you're like, I hear people like essentially feeling like entitled that they should get VC money, right? No, like no, that's not it. That's not how it works.
So to turn that into actionable feedback, because I think that there is a commonality, or I'm hearing a common theme of identify if it's the right time, if you're in the right pool of investors, if there are enough people in their investment committee that reflect you. How would you advise founders to go about figuring out whether or not the pond is theirs?
Yeah, go ahead.
Talk to other founders. So actually, you probably don't know this, but we pitched Gene, our startup, and I researched Gene. I was the one on the back. I was the man in the chair for Adrian when he was, and we looked at her track record and figured out if it was worth the meeting. Because in 2008 through 2010, he was the only Mexican American trying to raise money in Boston. And so if no one had deployed to a brown person, we knew it was probably a waste of our time. And that still holds true. And so look at the track record of the people that you're pitching to, talk to founders that they've invested in before, and back channel, because I guarantee you, we're back channeling you.
Totally.
Yeah. And I think one of the things that Hyperplane does, which I've learned as a relatively new team member, is that is super helpful, is this kind of idea of when a founder asks an investor how they work with founders, what we usually do is just say, don't take our word for it. Ask our founders. Feel free to reach out to anybody. If you need reference calls, if you need a founder to speak to their relationship with us, name a company and you got it. So I think really understanding how investors work with companies, not just how they say they work with companies, is crucial. Absolutely. Fernando, I just want to turn it over to you one more time quickly to kind of close the loop on that. If there's any other thoughts that you wanted to add.
I think on the flip side, great founders receive a lot of yes, and it's the fund's job to actually try to convince the founder to get a spot there. And I've seen a lot of that in Latin America. So that's also hard for us as funds, especially first-time fund. How do you prove that worth to a founder where your track record is not that robust? And Gene mentioned the pond analogy. I think great founders, when they discover that pond, it seems like there's more fish for them to actually store, the fish being the investor. So it's also kind of like a two-sided coin here, where we also have to prove our worth for the founders. And I think that's something that founders sometimes forget. right? It's not about taking the first check. It's about taking the best check possible, right? And what does that entail? So building that momentum, I think it's very important for a founder, and building that credibility so that the option pool can be actually vast, and you can decide who you want to partner with, as opposed to just taking the first check that comes knocking your door.
Right. So figuring out what the best check is and what the components of a best check really look like for you specifically. So wanted to quickly kind of do a round robin here and go through pieces of actionable feedback. I think some of the stuff that I've picked up from this conversation so far, and before we close it out, has been getting to know the structure of the capital allocators that you're receiving money from. So really understanding the check boxes of like, is this person viably going to invest in me? Like, are they going to be writing a check based on their thesis, based on their IC makeup, et cetera? And then the importance of this pause effect of kind of mitigating any sort of emotional turmoil, and, potentially sacrificing a relationship because of that. And emphasizing the relationship building as a part of that. And then third was one of my personal favorite, thank you, Sen, is crack in private, and keep yourself together. So would love to do a round robin of just like kind of last thoughts, if there are any kind of tangible action items that you can offer founders who are in the midst of a fundraiser or thinking about kicking off one, from either an operator or an investor perspective. And Rags, you want to start us off?
Yeah, I'd say one thing that really helps is surround yourself or cultivate the right number, not too many, not too few, of mentors or advisors that you can lean on during this journey. They can help you unpack. One, they can provide introductions. They can help you with your story. They can be a shoulder to cry on. They can help you with your pitch. Just like that, they can really, really help and actually add a lot of value during that journey. You don't have to do that alone. You should not be doing it alone.
I'll like flip the pendulum to the other side. I completely agree with that. And your personal responsibility. I think like so many things in high performance, it's like self-awareness plus personal responsibility. The best thing that I think you can do in a process like that to like stoke your own personal responsibility is figure out how you behave in tough situations that are outside of the tough situation that you're talking about, because it's really hard to see yourself real in that. So like an example, go to the track and try to run the fastest mile you've ever run. Do something physical, push yourself out of your comfort zone, having nothing to do with work whatsoever. And you will often see how you respond when you're challenged, and then come back to your mentors, and all of a sudden you start to see like, oh wait, that plays out in work too. One thing you can do.
Yeah, so I think that sort of on the idea that there's two communities that are trying to get together here. There's a bunch of villages. You're in a village of entrepreneurs. We're in a village of investors, and we're trying to make sure that the right people get with the right people so that we can grow up the right ones. And so so go listen to people on various fronts, figure out how to have a set of mentors that work. When I was fundraising as a way back there serial entrepreneur, I didn't know what a mentor was. Boy, I could, it hurt so bad to remember how much it hurt. So go find your friends, listen to them, and get a path, because it's a twisted journey always. There's nothing straight line about this one, although we should keep the lines connected.
I would say raise towards what you need. Some VCs are really good at customer introductions. Some VCs are really good at life advice. Like there's a VC now that has a silo fund for mental health coaching for founders. So raise towards what you need aside from the check, and surround yourself with people that are aligned in that direction. Because to your point of there being silos, there are VCs that work great together and VCs that don't work great together. If you take a check from one, you're aligning with an ethos that you want to make sure serves your company.
And maybe just echoing that, be yourself, right? I think sometimes we try to mold our personality to try to fit certain expectations of what a founder should be or what a fund manager expects the founder should act a certain way. But I think being a genuine self is something that you can smell from miles away, and approaching that situation on your true nature, I think it goes a very long way, and you'll attract the people that are in that same wavelength. So being yourself is something that I always keep true to my heart and try to convey.
Great. So I know we are coming up on time. I want to thank all of the speakers and the answers of these questions for their time and for lending their feedback and advice and expertise. I think all these anecdotes are extremely helpful for anybody who's fundraising or who's been through the process and thinking through how to be thoughtful about the next one. Lots of great feedback. So thank you guys.
Thanks, Abigail. Thanks to our speakers. Let's give it up for them one more time.